Hello, today I am back, and today it was a big day, not for myself unfortunately, but for the markets. It is the second full trading week of 2026, i.e., January, and man, the global lesson for myself in the future is just because a stock is up already does not mean that the stock is out of play as a long bias trader. What do I mean by that? So today, EVTV was on my screener. It was both on the regular screeners, like percent gainers, as well as Oracle. Um, for those who don't know, Oracle is a feature of this platform, which basically at 9:30 a.m. it predicts what stocks fit a certain criteria of being probably small cap, low float, near a multi-day, multi-week, multi-year resistance level. It is probably has good pre-market volume, I'd imagine. It could be up in pre-market. Basically, it has to be in play by 9:30. It locks in the price, the buy signal and the sell signal at 9:30, meaning there's no cheating. So if you have a midday gapper, it won't pick it up. Um, so it gives you the entry, which is the signal, and it gives you the next resistance level, which by the way, sorry, the signal is a few cents usually above a major resistance or a break of a major resistance, and the max or the resistance is where you sell, which is like the next resistance level. Um, so as you can see, EVTV was on this list, and it at the time it opened, it was probably below 132. At 9:30, the signal was 132, and the resistance was 387. It predicted a max of 98% win. So if we go back to EVTV, sure enough at 9:30, it was not yet at 132. The entry was saying about 132, just above this green line. So cool. And sure enough, as soon as it broke that, we were off to the races. Boom, boom, boom. And then Tim Bowen sent an email today saying, after the fact, quote, EVTV, today's DMP, or Daily Market Profits alert, with a post 9:45 signal hit and marched right to the goal, i.e. this line here. It failed because its major resistance, probably this year, maybe. What was the line? 177. Oh, yeah. There. Oh, no, no, no. 177. There. For whatever reason, it chose that number. Probably, to be honest, that's not the number. Oh, yeah, actually, probably based on this, right? It just consolidated so long, therefore it's a strong resistance level. Fine, right? And I thought, by the time I woke up, it was probably uh, the time I got to my laptop was probably around here, right? And so by this point, I was like, well, the stock is dead. There's nothing left for me out here. Sure, we're still above VWAP, but I was thinking, it's had its run. It's a solid 200%. And I thought, well, the stock is over, one would think. You don't want to buy an overextended stock, right? I mean, when you look at the chart, you definitely don't want to buy it. I mean, look how overextended it looks, right? You've got some overhead resistance, which is, I guess, fine, but oh, keep in mind it would be around here. You'd be like, look at all this resistance up here, up here. It's overextended. But lo and behold, I call this a dud. I say it's no longer a trade. Guess what happens? I think I looked at this in the bus and I was like, yeah, it's still dead. Then what happens? Boom! You have a second spike right through this major resistance level where this failed, goes further. So what could that have been? Maybe that's a wedge play right there. You see a break there, a break there. Maybe you're like, oh, okay, you've clearly broken through this line. Maybe, I don't know. I have the benefit of hindsight, so I totally would not have traded that. But perhaps that is a good level because you have the resistance here, here, and then you see a clear bounce where you're like, okay, 1, 2, 3. But again, this is the benefit of hindsight, right? And I guess the point is, I was watching the right stock, but I thought it was not in play. So I have to retrain my pattern list, my pattern vocabulary and knowledge, to be like, hey, this is actually an in-play play. And you think that's over. By this point, you're like, okay, so we're definitely done. Oh no! Psych! This was a fake. It actually goes even further. So we had not one, not two, but 3 spikes. And I missed all 3. This one, okay. Arguably, yeah. So I missed all 3. 1, 2, 3. So what does this mean? What does it mean? It means I'm watching the right things, which is great, but I need to realize that there's so much opportunity. So one, obviously the oracle level, the break of the high of day. So the early morning play. Then you have the intraday breakout of the new high of day, which is either here, or the below high of day breakout, which would be here. Both are valid. And what Tim Sykes did, his alert, sorry, not Tim Sykes, Matt Monaco's kind of diary that he posted today was saying that EVTV, the main event. So what was his analysis? It was a breakout here. You have your new support level. People think that this is a short because it's breaking down below support, but actually it reverses. So that was his analysis. What did he say? At many points, it was a trade in the morning, trade in the afternoon, and he's saying a trade in after hours, which when you look at it, sure enough, yeah, trade after hours. So that's 4 spikes in one day. So anyway, I'm looking in the right spot. I think my key lessons for myself was all day volume is a strong indicator that a stock is not done. Number 2, even if if it seems like you've missed the first move, there's potentially more intraday breakout potential and even after hours potential, right here. 3, just because a stock does not follow your typical like A, B, C, D, i.e. the breakout was a bit too late, doesn't mean that there's no afternoon VWAP hold. This is a textbook afternoon VWAP hold. Holding so that anyone VWAP, and technically right over here would be afternoon VWAP hold. That would have been also a bullish signal where it's holding support. Okay, so missed this one. It's great because it's the first 300%, 400%, 500% gapper of the year. Apparently last week was pretty quiet. So now we go to stock number 2. So why I say that I'm looking at the right stuff, but I keep thinking it's N, is this stock here exactly. This came up on my afternoon VWAP scanner at around this time. Why? Because it's spiked big, it has the correct like percent gainer criteria, and it's around VWAP. The reason why this VWAP shot up so quickly is because the volume is so light that the volume weighted average price is skewed towards this trades and this price action here. So it's a bit abnormal for this VWAP to shoot up that quickly, but it's just traded so lightly. So I said, well, it's a midday gapper. It's not following my typical shape. Mistake again. Not following my typical shape. This is not in play. Perhaps it's overextended. Maybe. We look at the daily. Okay, I was wrong about that, but anyway. Another tip for myself. Always daily. Um, anyway, so I thought it was over. But sure enough, boom! Right through. So, what does this tell me? This tells me that just because you have late day gappers too, does not mean that it's over. Doesn't mean that it's over. So, how could this have been traded? You could have traded a breakout above this level, maybe. It's a bit aggressive because there's no bounce, retest, bounce. But I think the point is that the opportunity is there. I had it correctly around 130. Yeah, around here is when I logged off. You think it's dead. But no, I should have realized this is the consolidation zone in between this channel. And I should have realized that any breaks above here, let's go. I probably would have gotten trapped here if I took the bounce, retest, bounce, because then I would have been like, yo, we're going. But in fact, it did not do that at all. I guess the only thing that would protect you here is if you say that a stock has to close above this point. That would be the conservative entry. The close above this green candle, which it did not. So opportunity is there. And what's great about this stock is that Tim Sykes was also looking at the exact right thing too. Bought SDOT at 395, buying the dip. So he's more of a dip buyer, but 395. Probably off of here, right? At 230. The opportunity is there. I just have to be conscious of what stocks to look at. So the global lesson, again, to reiterate to myself in the future, is just like EVTV, when you're looking at it at 130, at this point here, just because 130, again, 130, an S dot at 130. Just because a stock is off its highs at 130 does not mean that it's out of play. You can absolutely have stocks that spike twice in one day. Absolutely. In which case, it did. In other words, it's an intraday breakout of your already existing high of day. So, look, that's all I had today. I'm feeling a bit of FOMO because I missed out on some spectacular gains. I mean, look at that. Even if I just held here, it's not smart to just hold like that. But the fact that it would have been profitable is really crazy. So, man, I'm excited. So much opportunity out there. I just have to make sure to capitalize on it. I'm not at the stage yet to have known that this was still in play. But with experience, I'm sure that I can combine intraday breakouts with afternoon VWAP holds. Dip buys eventually, not now. Um, bullish trends of bouncing off of support, resistance to support conversion. Um, yeah. Anyway, that's all I've got. And hopefully I'll come back to you soon with profitable trades. I haven't traded since the last video, so see you later. Bye.